Good morning, this is Mayor Valensky with Driving Markets. Hope you're well. Sorry for the rocky ride here. Quick caveat, as per usual, anything said in this piece is an opinion only. It is not advice, not investment advice. Any money that you make is your money, any losses is your losses, etc, etc, and hopefully that caveat will be clearly understood. So let's move on. Alright, so the markets have been rising effectively since Thursday. What happened was that Laird Brainard and a few of the Fed members came out and stated that maybe the cycle of interest rate rises won't be as aggressive, or they indicated, didn't actually say, was indicated. The market interpreted that as a end of the interest rate cycle is in sight, which could be the case, but actually I don't believe is the case. Okay, so again, they've had it wrong the whole year, and there's no reason to say that all of a sudden in September now they're going to start getting it right, which is not the case. They're not going to get it right. Interest rates are going to continue rising. It's not all doom and gloom. Many people on this channel say, May, you're so doom and gloom, it's all over, it's so negative. It's not true. It's just stating some of the hard facts. There's no point in us misleading ourselves in thinking that everything's going to be, the interest rates are going to stop rising, inflation is going to fall. It's not going to happen in the short term. Eventually it will happen, where inflation will fall for proper economic real reasons, and obviously then interest rates will fall. They're not going to go back to zero. The reason why they were in zero originally is because of the 2009-2010 credit swap crisis, and therefore the central banks used huge liquidity tools in order to reflate the market, because effectively the banks were bankrupt and the market was about to sink, or the market was sinking so fast that you had major companies that could fold up. So the central bank in America, the Fed in the UK and Europe, came out with huge stimulus packages of zero interest rates and pumping in huge amounts of quantitative easing, which is effectively printing money, which they gave to the banks to keep the economy afloat. And that's what's happened over the last 10-12 years. The economies, or the banks, have been kept afloat due to huge stimulus packages by the central banks. Now what happened was that package was further boosted back in the pandemic and in the corona period by further stimulus packages, whether it was the furlough scheme or the bounce back loans, or in America there was actual physical checks sent to individual households. So there's trillions of dollars and billions, hundreds of billions of pounds poured into the economy to keep the economy afloat. So what effectively happened was the economy was kept together on some sort of emergency first aid, which wasn't a band-aid, but it was effectively keeping the patient in the trauma room, that they give them immediate treatment, that they can actually stay alive. And they wanted to keep, obviously, the economies and all the financial institutions pumping, and therefore they injected huge amounts of capital into the economy. Now what happens eventually is that capital eventually causes liquidity and causes a M3 money supply, but causes excess liquidity, excess money floating around. And as a result of excess money floating around, normally there'd be inflation, but there wasn't inflation over that period of time. What really kicked off inflation was Corona, because what actually Corona did, it actually caused a bottleneck and blocked up the supply chain. And it blocked up the supply chain and add in further liquidity during that period of time to the markets. Once we came out of the first lockdown and the second lockdown, the consumer was so desperate to go out there and get a Starbucks and go out there to go and buy, especially the branded goods. They've been starved of the shopping drug to go out there and satisfy themselves, that purchases went through the roof. Not only purchases went through the roof, there was no supply to replace those purchases, so the prices just went up and up and up. And that's what's happened since effectively Corona time, where you've got a bottleneck of supply, you've got continuous demand for normal goods and branded goods, and you had an injection of spare capital within people's bank accounts that had nothing to do with it, and therefore they wanted to go out and spend the money. And put all those factors together, you had inflation well before the Russian invasion of Ukraine. The Russian invasion of Ukraine is blamed for inflation by Joe Biden, because he's got no one else to blame, because he's so ineffective. He's absolutely useless, and he just walks around looking to shake someone's hand. And then Kamala Harris, who can't string more than 5 words together without making any sense whatsoever. Her herself should be removed from the job and fired. Him and Joe Biden and all of the Obama Barack team, which are still running the White House. But that's my political input on that particular part of the moment. So the inflation was already there before Ukraine invaded Russia. And once Ukraine invaded Russia, then everyone blamed Putin for inflation, which is totally untrue. It's not a blame for it. He aggravated inflation. He frustrated it further with obviously a rise in soft commodities like all the grains, the barley, the corns, the soys, etc., and also oil. But oil's come off quite a lot. And the reason why I'm focusing on this is because today you've got inflation numbers out in the US. You've got the Consumer Price Index. The Consumer Price Index today is likely to be slightly lower than it was in the previous month due to a drop in the oil price. And as oil comes down, which is a major constituent of the measure of inflation, then obviously inflation is going to come down. But that's only temporary, because oil is still on the uptrend, hasn't yet broken the uptrend. It'll have to go down to about $72 a barrel to break the uptrend, and even then I'm not too sure if it would continue falling, because OPEC is cutting production in order to maintain the oil price. So you've got inflation numbers out in the States today, probably going to be slightly lower than expected. That's going to cause the dollar to fall, so it's good for the pound and the yen and the euro, if that does happen. And obviously there's going to be stock markets will continue rising if they can see that inflation has come under control. So today was all about inflation, understanding the numbers behind what is driving inflation. The good thing in the UK is that Liz Truss, the new Prime Minister, has capped the energy prices at about £2,500 a year, and that's a major help to the households. And all for that, and the government should be helping all of the citizens around Western Europe. They should be doing that, and if they're not doing it, then they're simply incompetent and have got no concern whatsoever for the welfare of the citizens within that country. Okay, so this is Mayor Walensky from Driving Markets. Hope that was a brief explanation. Have a good day.